Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about some major lenders, one major lender and a lender I've never heard of, but they'll be worth checking out. They're starting to cut interest rates again, or at least these lenders are. And so this video, we're going to talk about who's cutting rates, how much they're cutting rates, and should you go for these kind of deals in this market. Now, before we jump into this, as always, if you haven't done already, do subscribe to the channel and hit the bell notification. We have a crazy amount of subscribers this week. If you look around this video, we are a smidge, literally that close to 23,000 subscribers. That could be you, or at least you could help me get there a little bit quicker. And while you're here, smash the like button, tickle the like button, do something to that like button over there. That really helps with the YouTube algorithm. It means you're just an all-round good person, and we get some more views on the channel if you do it. So what's going on? Well, interest rates have been interesting. Mortgage interest rates have been interesting over the last few months. What happened at the back end of last year and then January and February this year was the market was really slow. There wasn't lots of transactions happening. So what lenders did to get business, to build their business bigger, was to cut interest rates. And we had a price war for a few months, which was great. And rates went down at least 0.5% with most lenders. Then the market picked up because they cut rates. The market had some people that sat on the side that jumped back in and started buying, and January and February were pretty busy. Now, things have changed again. And so because they got busier, the rates started to creep back up. Now what's happened is interest rates are looking like they're going down again. Now, the reason for this is because the Bank of England had a fairly positive meeting last week. They said rate cuts are imminent. They don't say exactly when, but they hinted that it will be sooner. And they also said that rate cuts will probably be deeper than the market was expecting, which is all positive news. That meant that swap rates dropped a little bit. That meant that lenders are now considering dropping rates. So who's gone first? Well, TSB have got out there with some rate cuts this week, which are already in effect. They're not huge, but every bit counts, because what will happen is TSB will do this, then NatWest will look being competitive again, so Halifax and Nationwide, and hopefully they'll have a mini battle again. So Lloyd's TSB have dropped 0.15% on their 2-year, 3-year and 5-year deals. Now, the loan to value on these isn't going to be any good for a first time buyer unless you've got a chunky deposit. You've got to have 75% LTV. So either 25% equity or 25% deposit. But that's the start, right? And so we needed somebody to go first. And how the market normally works, I've got a broker looking for some deals for me today, is the broker will bring me the best deals. Who's the cheapest at the moment? It's the same as if you use the comparison sites. It's just going to be the ones near the top that you're going to consider. Now, you might not always go for the cheapest. Maybe the second cheapest deal has some better terms. You can exit better or less fees, something like that. But you'll always look at the people that are near the top. And that's why lenders need to be there. Now, I think that personally, you might see a little bit more of this, but I don't think it's going to be as much as we saw in January. I do know that the market is slowing down, and there's reasons for that. We did a video yesterday where we talked about stamp duty being cut. Now, that was leaked, and that's potentially something that the government are considering, the stamp duty holiday or a stamp duty cut in this instance. We also know that interest rates are going to drop. Now, both of those things mean that people that are considering buying will just wait. If you knew that if you waited a few months that the stamp duty was going to be eradicated from your deal, maybe you're buying something that was just into the stamp duty threshold and it's like 275, for example, you're going to wait if you know that the stamp duty is going to be gone in a few months. Likewise, if you're someone that wants an interest rate that's much lower or mortgage rate that is much lower, and you know the Bank of England are saying now, we're going to be cutting rates, the media are also saying this, that is going to slow down the market a lot more. So what I think will happen from that is that the lenders, the mortgage lenders, might get a little bit more competitive. But we're seeing the first drop by TSB, which is a big lender, was 0.15. It wasn't a quarter or a half. Last time they were much bigger. So let's see what happens. Now, there's another lender. I've never heard of this lender, but I definitely would suggest you go and check them out. They could be good. They are called Empowered Mortgages. So these guys are getting featured a fair bit over the last few days, and they have cut their rates as well. So they had a rate that was 4.59, and that has been cut to 4.49%. That is a good rate, and that's on a 3-year deal, and the fees are 999 quid. So that's someone to consider as well. And so you're going to see these other smaller lenders try and get more competitive, and you're going to see different things happening in the market. So this is positive. It's not big cuts or big slashes, but it's a start of something, and that's what we want to see. So what will happen is all eyes will be on the inflation data next week. I think it's the 22nd that comes out, and we're expecting a big drop in inflation. That is important. If we see that, then it's more likely that the Bank of England will drop interest rates sooner. If it's not as big as expected, that's not particularly great news. Now, one thing that's also happened in the last few days is the wage data has come out, and that is a bit high. And so I think it was at 6% increase on annual salaries. That's high. That isn't what the Bank of England is going to want to see, but it is allowing people to catch up, right? With all this difficult inflation that we've had, it is allowing people to get that pay rise while inflation's coming down, so they can catch their breath a little bit. So I think it's good. It's good for those people, but we don't want wages to go up too quickly. Otherwise, the bank will pause the interest rate cut, and that means we'll have to wait indefinitely. So these lenders are started. Let me know if you know any other lenders that I've missed. Tomorrow, I'll be doing the best mortgage deals. I'm expecting, who knows, I'm expecting some better results tomorrow off the Bank of England data that we saw. So if you know any lenders that I should be checking out, do comment below. Do smash the like button. Do subscribe and hit the bell. As I said, we're nearly at 23,000 subscribers. And go and check out some more content on my channel, including this video right here.